What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Tuesday, May 7th. Alright guys, Nvidia stock here today, Monday, up $33.51 a share in regular trading hours. That's plus 3.77%. It's down a little over 6 points here in the after hours. But listen guys, as always, when there's not like a fundamental repricing, a business-specific news catalyst, an earnings report, volume in the after hours is going to be very low. So take that with a grain of salt, whether it's in your favor or going against you. So here's what we're going to do. We're going to take a look, as always, at the volume profile. Just a quick analysis there. We're going to take a look at the psychological self-fulfilling prophecy levels. Then we're going to take a look at IV, finish out with expected move, and the directional bias coming out of the chain. So let's get started here on the 5-minute chart with our analysis of the volume profile. So here's what we're looking for, right? We're looking under the hood and trying to find bias that either supports these more aggressive moves or doesn't, both of which tell us something, okay? We got a big push off the open here today on Nvidia as we cracked back above $900 a share. And what's interesting here is typically, you know, we saw a taper in volume. However, typically the taper is a bit more aggressive, right? Like it would chop off these few candles here. So in this region here, right, that to me is a small amount. It's not tremendous. It's not ridiculous. It's not 1,000,002 6 candles into the day, right? But that is a small amount of bullish bias, especially considering the corresponding push above 9 that we saw. And then, of course, we saw volume continue to fade off even a little bit more aggressively as the stock in that moment kind of consolidated out, pulled back a little bit. And then throughout the rest of the day, we get a couple volume bars here and there popping. Too much of a risk of fooled by randomness on those. And then a very normal close with a high volume first bar after the bell. That's, of course, algorithmic rebalancing. We expect that. We see that basically every day on these blue chips, especially Nvidia. So really nothing to pull out in terms of bias here later in the day, but a small amount of bullish bias there off the open, and that move did hold throughout the rest of the day. Now let's move on here. Let's take a look at the psychological self-fulfilling prophecy levels here on the 30-minute to start. Now you can see here, we continued the trend of bouncing up and pulling, yanking that 50 period here on the 30-minute higher and higher. Look at this. It actually is reclaiming $900 a share on that 50 period in the after hours. You guys know I want as many psychological barriers, in this case to the downside if I'm a bull, as possible. That 50 period on the 30-minute is 1, and reclaiming 9 adds a little beefiness to that level. It's a good thing to see. Listen, by the way, if you guys are new here, NVIDIA is a daily upload. Okay, my goal here is 10,000 subs. We can do it, of course, but only with your help. So I greatly appreciate you subscribing to the channel, and I'll keep the NVIDIA videos coming. Now, looking here. Bulls, what I'm looking for here tomorrow now, Tuesday, I want to see continuation of that 50 period moving higher, reclaiming each kind of $10 increment. That's a good thing to see. $10 increments are typically what I look at on NVIDIA as like the smallest psychological level that I'm willing to consider. Any back test of that 50 period, I want to see that hold. I don't mind what volume it tests on, as long as it bounces on elevated volume. Okay, now you bears, getting down through the 50 period on high volume, retesting it on lower volume. Even if we retested 9 and rejected off 9, I would actually be okay with that, even looking at the 30-minute. But to stay specific to the 30-minute, whereas 900 is more like a daily level, right? Downside break hard through the 50 period on high volume, low volume retest, high volume confirmation, meaning rejection. Reclaiming that 50 period as short-term resistance. Bears, that's what you guys would ideally want to see specific to the 30-minute. That could set you guys up for a downside test of the 200 period here in the near term. Bulls, that's what you guys wouldn't necessarily want to see. Now, let's move on here to the 4-hour chart and take a look. We'll be quick here on the 4-hour just because you can see the only thing specific to the 4-hour that I like to look at are the 200 period, that gray line, and the 50 period, which of course are different on the 4-hour than they are on the 30-minute. So they're kind of different levels, even though they're the same time frame. They're on a different time frame chart, okay? You can see here the last couple of days we've ripped upside through the 200 period on the 4-hour. Today just continuing further and further away. So we now find ourselves approximately 4.2% to the downside away from that highest level, which is the 200 period. Really all I'm looking for, if you're a bear, you know, if this comes back into play, that 200 period, I want to crack that back to the downside, all right? But really, immediately, bears, ideally not seeing a tremendous ascending trend out of that 50 period would be great. Whereas bulls, you want that 50 period claiming as much ground each day as possible try to yank that quicker moving average here on the 4-hour, another psychological potential barrier back to the downside, right? Yank it up and get up underneath the move. This upside move is what I'm referring to, as quickly as possible. You want as many psychological barriers putting doubt in the bears' minds as possible, whereas bears, you want as few as possible. Okay, you kind of want that thing floating on thin air, so to speak, to put doubt in bulls' minds and to give more bears, which would be your peers in this case, confidence. Now, the most important chart of all, the daily. Okay, of course, we don't have earnings coming up until the 22nd, so no worry about that, at least this week, especially not heading into tomorrow. You guys notice anything that happened today on the daily? We briefly talked about it already, right? $900 a share cracked. That's good. We've been struggling with that level going back to the beginning of April. It's been a little over a month since we've really been able to, well, I suppose here on April 11th, we tried giving it right back up the next day, okay? But today is by far the most definitive upside break of 9 in over a month. So listen, the story here on Nvidia is really simple tomorrow. Tomorrow is the battle of 9, and I would argue 950. You guys remember on Nvidia in videos of late, I'll say, we've been talking a lot from a bullish perspective of how, like, when we were down here struggling, you guys remember I would say, like, well, we need to reclaim 850 and then the 50 day, right, the white line, and then 9. And then finally, after a break of 9, the next levels I'm really not, or I suppose I'm really looking at, meaning there's not really a lot in the way, is like 974, which is all-time high, right? That area. And then really it's $1,000 a share. I mean, 950 is a smaller psychological level that I'll pay attention to. You can see we kind of rejected in that area more or less back here in late March. I'll pay attention to 9, but really, guys, I'm looking past the all-time high because 1,000 is so big. I just think it's going to take precedence in people's psychology. And that's everything, right? On these day-to-day videos, we're focusing on the short term. Okay, I really like to talk about the short term because it's a different game. Long term and even midterm, it's fundamentals, right? But there's no denying that aside from fundamental repricing of a stock, like on an earnings report, and that happens very quickly, the short term is all psychology. It's a different game, and it's very, very interesting. And I really think $1,000 a share just takes precedence over like a smaller psychological level like 950 or even an all-time high, though I will be paying attention to the all-time high ahead of 1,000. But listen, tomorrow, okay, $900 is kind of the level I'm paying attention to because today was a pretty big green day. So if we see a retest of 9 bulls, I want to see 9 hold. I don't want to give that up and end up back in this channel from 850 to 9. I want to see 9 hold. If we could, get above 950 tomorrow, that would be a big deal. Okay, that would be really good to see. And then we would have, this potential rejection in that area and the all-time high to worry about ahead of 1,000, which is the big level. All right, bears. You heard me cringe talking about getting back into 850 to 9 from a bullish perspective. From a bearish perspective, that would be beautiful. Because bears, really, what do you want? You want to break down back below 9, back below the 50-day, and back below 850, because in your head, you're like, okay, how do I encourage as many bears as possible and discourage as many bulls as possible in as little of time as possible? That would be how you would do it. You would crack all 3 of those levels back to the downside, and that starts with breaking back down below 9, reclaiming 9 as resistance, setting yourself up for a near-term test of the 50-day. Okay? Implied volatility. Actually, let's zoom out. Come back in a little bit here to get a few more months. All right, if we compare this to the last 3 or so months, you can see that compared to that, we're kind of in terms of time, I would say the mid to slightly higher range. Okay, whereas if you look at this compared to the last month, even month and a half, going back to this area, it's high. Context is so important with IV. You need to be looking at the time frame that's similar to your intended trade time frame. Okay, what I mean by that is if you're looking at buying contracts that expire in 4 weeks, you should be looking at IV for the last 1 to maybe 2 months. Sometimes you want to go a little over to get more context. If you're looking at buying contracts that expire in 9 months, well, then really what you should be doing is zooming out and looking back about a year. Okay? Which puts you back, way back here. Okay, because this is approximately a year here. It paints a little bit of a different story here on Nvidia, but on some stocks it'll be tremendous, and in some cases on Nvidia, I'm sure in the future, it'll be tremendously different. Okay, and that can make or break a trade. Because a huge mistake, one of the biggest mistakes I see in all of trading, the entirety of markets in general, is the concept that I can just approach options trading with a directional bias. That's all I need. For your own sake, guys, not to try to pile more on, because that is the quickest way, I think, to discourage someone who's learning, is to just pile everything on. But at the same time, I will never hold back information that I think could benefit you. The last thing I ever want to do is treat you guys like you're A, not worth it, or B, not capable. Okay? Because, we're all very similar. Okay? It's just a matter of devoting the time. So even if you're a beginner and you watch these videos and sometimes you're like, I have no idea what he's saying, or this is hard to follow. I think, honestly, just try. Okay? I stumbled through it a lot early on until eventually everything was kind of clicking. And the same thing will happen for you. It's just a matter of devoting the time. If you do not devote the time, it won't happen. Okay? But if you take each piece from these videos that you might not fully understand, and you take, a day, 2 days, or maybe a little longer, maybe a little less, and you really focus in on that one aspect, eventually, these videos aren't 4 hours long, okay? Eventually, you'll have it all covered, and you'll watch, and everything I say, you'll be like, yep, oh, saw that coming, okay? And that is tremendous progress, okay? And, that's why I refuse to hold anything back for the sake of maybe appealing to a wider audience, or just making something sound more simple, because trading isn't simple. Trading is hard. But that's why it's worth it, right? That's the only reason why it's worth it. If it were easy, it probably wouldn't be worth it, because the opportunity would be different. All that to say, if you don't understand everything that I'm saying right now, it's okay. We've all been there. Every world-class trader you've ever heard talk, or you've ever talked to, or you've ever seen has been there. It's a part of the game. Okay, there's literally nothing to feel bad about. It's a guarantee that you will be there at some point. Keep studying, it'll click, and at some point you'll watch, and you'll probably know what I'm about to say before I say it, which is where I want you to get. Now, expected move, okay? That's the volatility expectation, kind of part 2. First, we start with implied volatility. Now, expected move is also a very important factor. Next expiration we have, of course, we don't have the luxury of daily expirations on Nvidia yet. I believe it probably will come in probably within the next decade. I hope sooner, but we have it on SPY, and that's a huge luxury. I've been very much so enjoying that. But we have Friday here. The expected move by Friday's close compared to today's close is plus or minus $37.14 a share. So you guys know the drill, right? We have Tuesday, Wednesday, Thursday, Friday. We divide that by 4 trading days. That gives us $9.28, but that assumes a green streak or a red streak into the end of the week. So in this market, I'm adding back 50% to account for that. That gives us an expected move with a little bit of guesswork by tomorrow, right, compared to today's close, of plus or minus $13.93 a share, around there. Again, that includes a little bit of forced guesswork because we do not have daily expirations and we have to do everything we can. But the traders who do the best, I suppose, quote unquote, guesswork, the most accurate, most consistent guesswork, tend to make the most money. So that's part of the game. So remember, by design, that does not include a directional bias. But what does have a directional bias is the last thing we'll do here, the straight up volume. This is all the options volume in Nvidia from today only. Over 1.1 million total contracts traded here today on Nvidia. Just under 718,000 of those were calls, and just over 427,000 were puts. So we are seeing a call side bullish bias on the overall call put ratio here today. But if we break that down by time frame, the 0 to 20 delta range, right? I call those the short-term speculators. It flips. 194,000 calls, 224,000 puts. So we go from a bullish overall bias to a slightly bearish short-term speculator bias. But what does that tell us, right? Because we're making up for it somewhere in the total. Well, that tells us that as we go closer to at the money, and especially like in the money, that bullish bias really becomes pretty obvious, more distinct, okay, and pretty deep bullish bias with the more midterm and longer term on average bets being placed here today. Guys, if you want to get my personal daily scalp setup alerts, my in-play stock alerts, human verified by me, unusual options activity, and maybe even become a platinum one-on-one student, take a look at that link in the pinned comment. And listen, if you're getting value out of these daily NVIDIA uploads, I ask you to do one thing. It's 100% free, takes half a second. Leave a like on the video, and then get out of here and enjoy your day. I greatly appreciate it, and I'll see you in the next one.